Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 25th, 2025, and we're diving into Carter's first quarter fiscal 2025 earnings report. Carter's, a leading apparel company for babies and young children, has just released its latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Carter's performance and the insights from their latest earnings report.
Revenue and profitability overview. Let's start with the top line. Carter's reported net sales of $630 million for the first quarter of fiscal 2025, a decrease from $661 million in the same quarter last year. John, what are the key factors behind this decline?
The decline in net sales, down by 4.8%, can be attributed to several macroeconomic factors, including inflation, elevated interest rates, and declining consumer confidence. These elements have collectively contributed to lower demand across Carter's segments, including U.S. wholesale, U.S. retail, and international.
Despite the sales decline, Carter's adjusted earnings per share came in at 66 cents, beating the forecast of 53 cents. What drove this better-than-expected EPS?
The adjusted EPS of 0.666, although lower than last year's $1.04, exceeded expectations due to effective cost management and strategic pricing investments. The company also benefited from improved sales trends in March, particularly in the U.S. retail segment, which helped offset some of the earlier quarter challenges.
Operational efficiencies and future outlook. Moving on to operational performance. Carter's operating income decreased significantly to $26.1 million from $55 million last year. What were the main contributors to this decline?
The decrease in operating income, down by 52.6%, was primarily due to investments in pricing, fixed cost deleverage, and costs related to leadership transition and operating model improvement initiatives. These factors also led to a reduced operating margin of 4.1%, compared to 8.3% in the prior year.
With the recent leadership transition and tariff uncertainties, Carter's has suspended its forward guidance. How should investors interpret this decision?
The suspension of forward guidance reflects the company's cautious approach amid significant uncertainties. The new CEO, Douglas C. Palladini, is focused on assessing the business and ensuring that future commitments are met. This prudent stance is understandable given the current market conditions and internal changes.
Leadership transition and strategic initiatives. Let's discuss the leadership transition. Douglas C. Palladini has taken over as CEO. What does his appointment mean for Carter's strategic direction?
Douglas C. Palladini's appointment as CEO marks a new chapter for Carter's. He brings a strong vision for returning the company to consistent, profitable growth. His focus on leveraging Carter's brand strength and market distribution is expected to drive long-term growth. The leadership transition costs of $6.1 million reflect the company's investment in this strategic shift.
How is Carter's planning to capitalize on its brand strength under the new leadership?
Palladini emphasizes the potential of Carter's brand assets and the special bond with consumers. By enhancing product and promotional strategies, Carter's aims to improve customer retention and expand its market presence, particularly in the U.S. and international markets.
Key takeaways. In summary, Carter's first quarter fiscal 2025 results show a mixed performance with a decline in sales, but a better-than-expected adjusted EPS. The company is navigating through leadership changes and market uncertainties, focusing on leveraging its brand strength for future growth. John, any final thoughts on Carter's investment prospects?
Carter's remains a strong player in the children's apparel market, and its strategic initiatives under new leadership could unlock significant value. However, investors should remain cautious due to the current uncertainties and monitor how the company adapts to these challenges.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Carter's performance in the comments below. Until next time.